What's good, YouTube? Welcome back to the Stock Hustle channel with your boy William. Today is Monday, October 25th, 2021. So, as always, guys, nothing that is discussed on this channel is financial advice. Everything is simply financial education. I simply want to teach people how they can simply not have to slave 9 to 5, and instead they can hustle 24/7 in the market and become even more profitable than they could have ever imagined by simply just understanding a couple fundamentals about the market, as well as simple stock analysis and looking into financials and being able to interpret that data. But as always, any likes, subscriptions to the channel are always 100% appreciated, guys. Don't forget, you can always hit me up on Twitter or my new IG page, Stock Hustle 2021, for those of you that are interested. But let's get into it. So as you guys can see from the ticker on the top left corner, this is UPST, otherwise known as Upstart Holdings Incorporated. So the other day, I was watching one of the mainstream media articles or news feeds that they were showing, right? And they had invited a YouTuber on the channel or on their TV network specifically to talk about some of their most bullish opportunities that they saw in the market, right? And it literally irritated me that this person presented. I'm not going to say any names because it doesn't matter, right? That's irrelevant. It happens all the time, but it gives us a bad name as far as retail investors and things we choose to invest in and why, right? It makes us seem like dumb money when we don't know what we're talking about, or when we go on TV, drop a ticker, and then can't even explain what it is. Like, that's asinine, to be honest. Like, why would you do that to yourself? Like, come on. You're getting this opportunity to present on a TV network that thousands or millions of people are going to get to see, and you're going to get to showcase for retail, hey, like, these guys know what they're talking about. They see opportunities and they're taking advantage of them, and you literally can't explain anything about the ticker. I mean, come on. So it irritated me, so I wanted to make a video so that anybody that is interested in this can actually figure out what it actually is. Now, some of you may know, or some of you may not know. If you visited my webpage, stockhustle.net, it gives you a little bit of my bio specifically on me. I do work for one of the big banks. I've been in the money industry essentially now since, I don't know, 2008, 2009. I've been on the trading side, investment side, banking side. Now I'm in the operations and risk side, right? So it's given me a little bit of understanding of all sides of the spectrum when it comes to money management, and especially now risk and controlling risk, right? Well, you take a little bit as you grow through your career, right? And you kind of develop certain special skills, right? One of the special skills I feel that I'm really good at is fishing out fraud, or essentially fishing out bullshit, if you will. Excuse my language, right? Or when companies want to throw bullshit in your face and call it gold. Well, this company specifically is 100% that in itself, right? UPST, Upstart Holdings, is specifically an AI-driven, essentially, lender, right? And it started off as just mortgage lending, but it has grown way past that now. These guys do automobile loans, they do credit cards, they do home loans, they do debt consolidation, pretty much anything around lending and requiring an approval, they do. However, they do it instead of people or a credit analyst going in and reviewing credit for certain people and saying you're approved or you're denied, right, and leaving it to that person's choice or error. An AI system is now making that determination, and they got some pretty crazy stats, right? First and foremost, before we get into that, let's dig into the chart. So as you guys can see, as of July, this company has gone on this massive run straight up to the sky. Pay attention here at the 50-day moving average in July. We were really expecting this 50-day moving average essentially for the majority of the year. We had a couple false breaks below it, but for the most part, it's been pretty well respected, right? Well, as of July, excuse my throat, as of July, we simply have separated from that and now formulated this other trend line that you see here in this red line, and have been trading on it, essentially running up this entire time. As you guys see, this is probably the biggest separation from the 50-day moving average to the trading candles, which was what, October 15th. It had a couple red days here recently, and is currently sitting at a support at 342.29. Important takeaway. We have currently started a selling period, or a bullish run, or excuse me, a bearish run. The RSI essentially sitting right above neutral at 56.79, and our ATR is giving us a 21.25 swing, or otherwise a $42.50 swing. That means it could swing $42.50 to the top side or $42.50 to the bottom side. Now, another thing I want to point out, earnings. This company started trading essentially early part of this year, or excuse me, latter part of the last year. So it's essentially been trading now for about 10 months. But check out these earnings. So if you're on Thinkorswim, you hold your mouse over the blue icon, it gives you like reported earnings. Estimated 0, reported actual 7 cents per share. Next earnings, expected 9 cents, reported 22 cents a share. The most recent one, expected 11 cents, reported 62 cents per share. That's ridiculous. The company just started trading, and they're already putting up some pretty solid financials. Well, luckily for us, they have a website, which I already did take the liberty to look up, which is here, right? Upstart. Our mission is to enable effortless credit based on true risk. Again, risk. Why? Because credit really matters. Money is a fundamental ingredient of life, and unless you're one of the few percent of Americans with significant wealth, the price of borrowing affects you every day. That is so true. Throughout history, affordable credit has been central to unlocking mobility and opportunity. Also very true. That's why they say your credit is very important. If you don't have credit, you can't buy a house, you can't buy a car, you can't have credit cards, you can't buy really expensive things you can't afford, simply put. I mean, you shouldn't be buying those things anyway, right? But that door is completely shut, locked, and boarded up if you have no credit. Number one, it's founded by ex-Googlers, or people that used to work for Google. So this platform was founded on tech. It is 100% tech. Obviously, it's AI driven, so tech is going to be heavily involved, right? 13.6 billion originated in loans. Of loans fully automated, 71% of those loans are fully automated. It means no human person has to touch it. It's all driven, manipulated, and controlled by the AI system. Super crazy. Lending a century is a year old. Yep, we know that. Traditional lenders use simple FICO-based models to decide who is approved for credit and at what interest rate. Excuse me. While simple, intuitive, these scorecard methods are limited to their ability to quantify risk. Again, also very true. It's left to a person's decision to make that determination. Is this person worthy of approval of credit, or is this person not worthy of approval of credit? But right, people can make mistakes. Anybody can change. Anybody can turn their life around, right? So that fundamental thesis that leaving it to a credit lender to make those decisions has flaws, right? This is where AI steps in and says, no, I'm going to correct those flaws. This was pretty crazy. I didn't know this either. 4 in 5 Americans have never defaulted on a credit product, yet less than half have access to prime credit. That's insane. Less than 50%? That's some ridiculous numbers. The implication is eye-opening. With a smarter credit model, lenders could approve almost twice as many borrowers with fewer defaults. Again, really crazy because it's not affecting just one side of the table, it's both. It affects who gets it, and then it affects the risk side of it, who defaults on it and who doesn't, right? Weeding out the people that may default versus the ones that don't. Crazy stats. Crazy stats. AI is an uptrending existing industry. Yes, that is true. There are not many companies out there that are AI. I think there's only one other one called Opendoor. Ticker is OPEN. They are also an AI-driven mortgage company, but I think they're more specified just for mortgage. As you guys can see from the left-hand side, they do credit, auto loans. They do a lot of things. Upstart is a giant in the making, to be honest. Upstart is one of the first to apply for AI multi-trillion-dollar credit industry. Upstart goes beyond the FICO scores using non-conventional variables to scale providers' superior loan performance and improve consumer access to credit. Again, everything we've been talking about. Allowing us to approve more applicants at a lower cost rate. That's insane. This stat right here, 26% more borrowers than a traditional model and yields 10% lower average APRs for approved loans. So on top of everything I've already discussed, not only that, they're also getting people who they're approving 10% lower averages on their annual percentage rates, which are APRs for those of you that don't know. Again, super crazy stat, makes me even more bullish, right? They're going to talk about realized losses and gains, risk, control, right? And then it says here, AI has the opportunity to improve most types of lending globally. That word is powerful. Globally. not just domestically here in the US, globally. And I truly feel with the numbers they're putting up so far, that's going to happen unless something ridiculously crazy happens or they make a serious flaw or mistake somewhere. But I don't see that happening. I think these people that work for Google know what they're doing. Number one, obviously their product stands behind it. Obviously the fact that they're producing solid earnings from the go, essentially. Even from the first one, they didn't miss. I don't feel that this one coming up here, what is this? On November 9th, they're going to miss either. I think they're going to knock it out of the park. This bullish run up to it kind of gives you that idea or interpretation. But in case you were doubting of anything I've said up to this point, what if I told you some of these executives and co-founders also have made large purchases of their own stock, which is another bullish sign for anyone who's investing, right? So attached to Upstart, you got to dig for it, but there are some SEC filings. I did dig a couple up. So this is for Nicole Allison, which Nicole Allison, where is she? This lady right down here, general counsel. So she's an attorney essentially for them, right? General counsel, that's what that means. You see acquire. She acquired 22,500 shares on October 20th, 2021. Yeah, she did sell some. Again, I know people are going to say that, right? Yeah, she did sell some. She took some profit. I mean, would you blame her? This stock started trading essentially in December, January at, what is that, 38? No, what is that? $23.46. $23.46. Can you blame her for taking some profit off the table? I would. I mean, I'll be honest with you, I would. I think at this price, that's a pretty good spot to take some profit just to be safe, especially since we've now essentially started consolidating upwards of this channel. So she did sell, but she did also acquire. That was the first one. So I'll attach this in the details in my video below. The other gentleman, Gu Paul. And I'm sorry if I'm enunciating your name wrong, or Paul Gu, excuse me. He did a purchase as well. First purchase was on October 15, 2021, 106,000 shares. Then on October 15th, he followed that one up with another 48,000 shares. Yeah, this gentleman did also take some profit. I'm sure being a co-founder, he has significant position with the company. So him selling and taking profit, I don't have a problem with at all. I never do. I think executives have that right. It's their money. Just like you guys choose to buy or you choose not to buy. Same situation, right? Each person does with their money as they wish and what they feel is best for their financial situation. But the fact that he did buy another 154,000 shares again at this price is bullish to me. That's just the way I interpret it. Again, you maybe see it different. Everybody's different. Looking at news, you go into Google News, you see that they did a credit union partnership, giving them more access to loans in Kentucky. Pretty much news hasn't stopped with this company at all. Usually what I like to show you guys at this point too is Marketbeat, institutional ownership. That's something I'm really fond of. I like to make sure that people that I'm investing in, people or institutions are also buying. As you see, 352 million Q4 in the first quarter when it launched in December. So what, those couple of days, 352 million were brought in a couple of days. Q1 added a 258 million. Q2, 702 million. Yeah, there were some sales in Q1, Q2, and Q3. But what I always look for is who's holding. And as you can see highlighted, Renaissance Technologies is more than certainly one that I always look for. That's an AI-driven investment company. Come on, AI and AI go together. There's a reason why it's here. Vanguard is also in here. Virtue, you know, some of the big giants are in here too. Not really important to me, to be honest. I'm more bullish on the company as it is without the institutional ownership. But like I said, I always like to look for that. Giving you some price targets. Nasdaq does have research analysis on it. They have a strong buy rating. 2 analysts covering it, one from Jefferies, one from Piper Sandler. As you see, they have a high of 350, average of 297, and a low of 160. Well, at what is this today? As of Friday, 342 and 56 cents. We're well above that target. We're right at that high of 350. So sounds like they were dead on in their analysis, right? From the looks of it. So the last thing I always like to leave you guys with is the flow from Unusual Whales. As you guys do see, I did filter $30,000 premium or more. We are essentially we're bearish for this strike, but for the November 19th monthly, we are bullish, specifically for those looking at price targets 350, 360, or 390, 400, and 460 are the ones that are predominant. I did also want to highlight a pretty dope feature that I saw. on unusual whales. So if you hold your cursor here, sometimes you'll see this part is part of a multi-leg strategy, right? Now, for those of you that don't really understand what these trades mean, you can actually click on it and it will actually give you a visualization with the new tool. If you've ever used options calculator, this is like options calculator on steroids, TBH. 10 times better, 10 times more effective, because it actually gives you the trade. So if you click on it and you show or visualize trade, it'll take you to this screen here. In this screen here, it's going to tell you exactly what they bought for that specific trade for that amount of money. So as we see here, they sold 20 calls at 350. They bought 20 calls at 345, right? So they're saying that the shares they already hold, they're willing to let go at 350 if it were to hit, but they also wanted to give themselves the opportunity to pick up more shares if it goes 345 or higher, right? So net credit, they're taking a credit on this of 1,200. Their max loss would be 1,200 on this strategy specifically. Their max profit would be $11,200. Down here, it gives you a profit and loss chart, right? So what it tells you is if the price dips, they're going to keep that credit for the calls they sold, right? Which would be the 1,100. However, if instead the price spikes to the top side, they're going to end up making money, and they're going to make significant money, especially for this bet or for this option trade, right? And down here, if you hit profit and loss, it actually tells you, for example, let's say UPST decided to spike, and let's say by November 9th it hit 420. They would essentially pocket $6,100 in profit. I think this is pretty dope that Unusual Wealth has included this to their site, specifically because it gives you a visual of what the trades are, which kind of gives you a better understanding of how especially institutions are going to play things, especially when they're talking about large money, the whales, what they're playing and what they're thinking or what they're seeing, right? They're protecting their bottom line in case the price does dip, and they're also protecting themselves on the top side in case the price spikes, right? If the price dips, they're going to keep the credit that they get for the calls they sold. If the price spikes, they're going to get their calls taken away. That's why you see a little red here. But they also pick up more calls, so they end up making more money. Very, very smart strategy. I love this feature about Unusual Wells, and I hope you guys kind of understand what I'm getting at with it. But as always, guys, if you have questions, leave it down in the comments below. If not, don't forget, you can always hit me up on IG or Twitter. And as always, I'll catch you in the next one.